Hi, Peter Rose, founder of Longwood Currency Trading. This is one of the most important videos that I've probably done, and though you might have not a lot of initial interest in it, I hope you stick around to hear the whole thing. It's about the dangers of your trading with your emotions in Forex. Well, you know, I guess it's true in anything that deals in a financial manner. But particularly in Forex, because it's so fast and you have so much leverage involved, that if you let your emotions get away from you, so will your money. There's two areas that I want to talk about. One is emotional dysfunction when things are going badly for you. And then there's the problems emotionally when things are going good. Both are equally dangerous, and we want to take each one and look at it briefly. Obviously, when things are going bad, you feel bad, and that's going to affect your trading. I mean, how stupid is that? I mean, I'm not telling you anything new. But the more folks that you listen to or that you read about, you know, stuff like Trading in the Zone, about your emotions and how they can get in your way and how they can really complicate the trading process. You know, trading itself is very, very simple. We tend to complicate it with indicators and forecasting and fundamental analysis and all that other crap, and it's just a line wiggling around on a chart. And understanding that each wiggle on that chart is the result of an economic decision that somebody's making somewhere. Not you or me as retail traders. We're only 15% of the market. But the hedge funds and the banks and large institutional traders, those are the guys that are running things. They're creating the little squiggles on the chart that we're trying to ferret out whether it's going to go up or whether it's going to go down. And when we make the wrong choice, we go, oh, crap. And so if you discipline, you get out. Being a former real estate investor, you don't get out. You have to deal with the situation. So for me to go into Forex trading as a speculator and knowing the rules and how I can compound all that stuff much better than I could in real estate. That's why I switched from real estate into the currency market. But the emotions don't really play a part in real estate the way that they do in trading. You know, I mean, real estate, you go, oh, I love this house, I want to buy this. Well, I mean, that's when you're buying your home. But when you're doing investment real estate, you don't care. You don't care about stuff like that. You want to know the plumbing works, the roof is good, tenants are all got leases, and there's no pets. Yeah, stuff like that. It's a little bit more analytical. You can get really emotional when tenants don't pay you, or there's a fire or something, and then you get all wrapped up. But there's absolutely nothing that your emotions will do to screw things up in a real estate trade, other than if you piss a buyer off and scare them away. But in currency trading, it's all on us. We're the ones that make the decisions of whether we're going to go in or whether we're going to go out, and when we're going to do that. We don't have anybody else. I mean, if you are trading on a signal service, that's just craziness anyway. You're not going to learn anything. And it's your deal. It's your decisions that I'm talking about that you're making, and it's really hard to accept responsibility, not blame, but accept the responsibility for, number one, your actions, and number two, the consequences of those actions. Oh, we accept the fact, oh, I took that trade and it went bad, and so it was my fault that I took the trade. Yeah, well, it was your fault that it went bad too, because you stayed in it too long. But that's the emotion that we're not going to admit. And that's probably primary to just saying, oh, it's a bad trade, and I got out. When the price goes against you, it's a direct reflection on your ability, your character, your intelligence, you know, particularly for those of us who are talking heads on videos and saying, oh, well, you know, we trade and this is how you do it, and yet we suffer the same angst and liabilities of emotional trading that everybody else does. We don't avoid that. We don't get out of that. I mean, I've been talking for months now, if you've been following me, on the recent loss that I took. It was a small account, so I just let the thing run and margin called out on it, and I don't really care because the amount of money that I lost is insignificant in comparison with my financial state, and so I just let it run to margin because I wanted it to hurt. I wanted the emotion of pain, not the loss of the money, but the margin call, which puts a big flag up and says, you are a dumb fuck. If you get margin called, and I mean, you could go into a panic situation and get balled out like that, but when you do something stupid like I did, and the money doesn't hurt, well, look, if the money would have hurt, I would have been out at 8 or 10 pips. That's my stop anyway. But because the money didn't count, I let my emotions wander around into all the euphoric wishes and desires you can imagine. Oh, it'll come back. Oh, it'll hit the 21 EMA and it'll bounce off that. Well, no, it didn't do that. Well, it'll hit the 55. Oh, well, it didn't do that. Well, maybe it'll hit the 200 or the 300 moving average, which is a flat line anyways. I mean, God. It's emotionally draining. In that particular instance, because the money didn't mean anything to me, it was aggravating but not emotionally draining. And I knew that if I just closed out and took a 10 or 15% loss or whatever it was, that wasn't going to affect me. The dollar loss was not going to affect me. And there wasn't the emotion into it because I can talk my way out of that. I can convince myself it didn't matter. So I let the thing run knowing that I was going to be emotionally disturbed by that in a great degree. The other thing that I used to create an emotional duress on me for letting that trade run was and I had more money, but I could have gone to other currency pairs. I could have made other trades, but if I was going to be that stupid, then I was not going to allow myself to trade. I love to trade. I didn't allow myself to trade. 2.5 months I sat there with my thumb up my ass not trading, and that was emotionally disturbing. Now, can you imagine if that would have been significant money and it would have been running against me, not to the extent that it was, but let's just say it was running against me and I should have got out, okay? To then say, oh, I'll open another trade? Holy crap. And yet you see so many traders trading multiple currency pairs and different time frames, and one's going bad, and it's absorbed by the distribution of emotions across the broad spectrum of the number of pairs that you're trading. Some of them are doing good and some of them are doing not so good, and you figure that in the long run the ones that do good will outweigh the ones that do bad and you'll come out ahead. I disagree with that thought process. We're not hedge funds here. We're not dealing with millions of dollars. The average retail trader's account might be around $3,000. So you can't be spreading $3,000 or even $20,000 out among multiple currency pairs. Pick one and become an expert in it and trade that. And if you get in a situation where the thing is starting to go against you, you'll have much more of a psychological release to say, okay, I'm wrong and I'm going to get out of that trade. But you can't afford to get into letting that trade go too far, because then you go into the fear and the hope and the greed and the expectation and all this other shit that we go through as traders, and our minds playing with us. I mentioned on another video a while ago that I got this little bridge troll Ed that sits up here on my left shoulder, and he tells me to do stupid shit. I mean, I can yell at Ed, but Ed, he's just going to keep telling me to do stupid shit. And the more stupid shit that I do, the worse it gets. And you can't get out of it. You just can't. And even though that was a little trade, when I was a little behind, I was emotionally distraught by that trade. And I let it go partially because the dollar value didn't matter that much, But partially I let it go, yeah, because of the emotional fall in love with the trade. Geez, I made a decision. This was a good trade to make. I had made 6 trades before that. The account was up, I don't know, 10% in a week, and I was doing really well. So I thought, well, I made 6-8% down over a 2-week period of time. I'm 2% up. I could live with that. Well, I let the thing go, And as I did a video not long ago on that, it was a 57% hit against my bank. That's how bad that sucker went. So toward the end, it wasn't my emotions that was making me stay in the trade. But in the beginning, it was. And you just can't let that happen. But you can do the same thing if a trade is running dramatically in your favor. I had one like that not long ago. They say, let your winners run. Okay, and I just let it run, and it ran, and I was 3% up on my risk, and I was 4% up on my risk. Well, let it run. And that son of a bitch turned around, and it was like shit through a goose. It just went, and I ended up, I think I made 1/4% or something on the trade. I might have lost a little bit. I don't remember. I was so pissed off because I had such a tremendous gain, and I lost it. Now, I have rules and structural constructs that I look at in order to say, this is a great runner, but at some point, it's not going to run anymore. It's going to turn around. So what point is that? Where do I need to start looking for that point? And I didn't let that happen. I didn't look at that analysis. I was wrapped up in the fact that this thing had run, I think it was 10 or 12%. Where do you get one trade that runs 10 or 12% on your risk in a couple of days? It wasn't even a couple of days. It was a day. I was in one of those blow-off things, and I should have just, I get out. My stockbroker, Joe Lawler, told me one time, he said, set a reasonable expectation for a gain on your investment, and when you reach that, get off the train. Don't stay on the train. You buy a ticket on a train to go a certain distance, to go a certain point, and when you get there, you're there. Get off the train. And I'm not saying, I set a profit target at 10 pips and it goes to 10, but it looks like it's going to go another 30 to get out of the trade. That's not what I'm saying. But you have to have clearly defined rules to exit that trade when it starts to degrade on you before it completely collapses. And that's where the emotion comes in, as you're watching this thing go and you're thinking, I'm a hero, man. I made 10% on my account, or this week I made 10% on my account. Holy crap, I'm a hero. Guys, it's going to go great. You go out for a cup of coffee, the thing turns around, and the 10% gain that you had is now 8%, and you're devastated. I let that 2% slip away, so I'll stick in there and I'll hold it. Then it goes to 6, and then it goes to 3, and and you can't get out. And then a 10% gain on risk becomes a 3% loss. In fact, it's those kinds of trades that can go into equally negative loss as you were experiencing on the gain, because your emotion's just going to flip. Because it's the same emotion, right? It's greed running after you and blocking out the fear. The greed, this thing is going up, it's 3%, it's 4%, it's 8%, it's 10% in my favor. I'm a hero, I'm a wonder, I'm just going to make all this happen, it's great. And then the thing turns around, now it's running 2% against you. Well, it was 10% in my favor, 2% against. It'll turn around, it'll go, because I'm right. I'm a hero, I know how to trade. Okay, guys, just pay attention to your emotions when you're involved in those trades. When you sit down to write your trading plan up, look at a trade, get a chart out, and project out what it would be like if you caught a big trade like that. And so now you need to establish a structural rule, a technical rule that will take you out of that trade without losing too much of that gain. You need a hard and fast rule to do that. I've got 2 of them, and I follow those, and it works out pretty good for me when I follow my rules. Everything works out great, and I make money. So it's hard for me during this period while I'm waiting for my last building to sell, and then I'll refund my account with a substantial amount of money. So right now I'm just I'm trading this small account, and emotionally I'm trying to treat it like a big account, but I can't, because it just doesn't. I'm trading $1 a point. Who the shit cares? 20 bucks. I pay 20 bucks for a pizza. Oh, yeah, I know it's 2% loss on a $1,000 bank trading a mini, but it's just a pizza. So I can't. But that's not to say that you would be faced with the same thing. I started this the wrong way back in when I was using my simulated accounts. I was playing with the $50,000 that they give you in the sim account, and then when I opened my real live trading account, my 3rd one, because I wiped out of my first 2 mini accounts, my first 2 real mini accounts, but I opened my first big real trading account with $40,000, because that's what I was trading in the simulated account. And man, it just all the shit went to hell. I mean, I hit 6 the probabilistic, you're going to hit 6 losses in a row at some point if you trade enough. Well, those 6 losses came pretty much right at the beginning of the trading, and I lost a lot of my money, and my emotions got all fucked up because I had experienced 6 losses before in a sim account, but I didn't have the emotional thing to it. I'm like, oh, I lost 6 times and everything will be okay. Well, when it's real money, when it's a car that you just lost, yeah, and I didn't have hard and fast rules because I didn't have a mentor when I started. I didn't have a mentor to tell me to do certain things. For example, if I have a student, and I'm not in the training business, but I have people that come and knock on my door and say, hey, would you show some of this stuff to me? I say, look, if you're going to trade, start in a simulated account with a $1,000 bank, and that'll give you, with most currency pairs, it'll give you about $500 of actual trading money, because you need 5% down on a currency pair. So if your currency pair is 1.0000, you're going to need 500 bucks, 5%, in order to place as margin. So that gives you the other 500 bucks. Well, look, that 500 bucks at $1 a point, that's 500 points you got to lose before you wipe it out. I mean, you got to be really, stupid like me to let it run to margin call to do that. So look, anyway, I get them started out on a $1,000 simulated account, because I want them to learn the emotional reaction to $1 and have rules to resolve that, and to make it a big day to make $5 a day. That's 5 pips, right? And that's a 0.5% gain on your bank. Jesus, if you could do that on a $100,000 account, 0.5%, I mean, you'd be making really, really good money. It would be unbelievable. So why is it that folks can't do that? It's because, well, maybe they started like I did, and you get the lust for trading the larger numbers and taking the bigger risks and the bigger gains and all that crap. You have to really eliminate that in the beginning. That's what a mentor would do for you. A mentor helps mitigate your emotional connection to the greed and the fear that you're going to feel in trading by developing a significant set of hard and fast rules against an account size that doesn't matter. And once you develop the discipline to do that, it's like learning to swim. If somebody threw you off the deep end of the dock, you'd panic and you'd never want to swim, and you'd even get in a wading pool and you'd have a problem. So they start you out in the kiddie pool and learn how to float and all that stuff. And then if somebody throws you in a 200-foot deep pond, it's just floating. So you got to do the same thing with your trading. You know, I've been in karate for 50 years, and when I was starting out, you know, one of the things we always wanted to do was break fucking boards, you know. and you know, my instructor, it was a really aggressive guy, and just loved all the physicalness of karate. And oh, you guys want to learn how to break boards? Okay, great. You know, you got to learn how to break pencils first. So he put out some pencils, and you break those with a Shuto strike. And then he brings out a 1-inch board, and you know, he shows you how to line it all up, and boom, and you know, you can break through that 1-inch board. And so we break through 3 or 4 of those. This is all done in one afternoon. So you break through that 1-inch board, you do 2 or 3 of those, and let's do 2 of them. I was a green belt at the time. I had probably 4 or 5 months of training. And, you know, if you do this stuff right, a green belt should be able to go through maybe up to three of those boards. But you got to have the right training. You can't. So we're breaking the one board, and then we went to 2 boards, and you know, I hit that thing, and man, that was tough getting through it. Oh, you got to think through it, and you got to use all your principles that we teach you, and you know, you got to go. And I hit the thing again, and it wouldn't go, and we thought about it again. And, okay, hit it now, and boom! So I went through the 2 boards. So okay, and you think about that, and then, okay, well, let's try another 2 boards. And so, you know, boom! I go through the 2 boards, and I mean, there's about 8 or 9 of us that were doing this. So then the dumbass says, let's try 3. Anybody here want to try 3? What are you going to say? No, I don't think I ought to do that. Like, oh, you're going to try to 3. And so I hurt my hand trying to go through 3. Because I didn't have the confidence, I didn't have the skill, I didn't have the rules for that down. And so as a result of that, I never could really break boards. You know, people would come into my karate class and say, how many boards can you break? I don't break fucking boards, I break people. You know, stand here and I'll hit you. I don't have any problem hitting people, but I can't break boards. I mean, that's a psychological thing more than a physical thing, right? And the trading is the same way. You have to be really careful. You can't start with a big account like I did and have all the errors and failures that a new trader is going to have and lose all that money, and then have the emotional stability to come back and learn how to do it right. You got to learn how to do it right to start with. I thank God that I've got a background in physics and a background in karate and a background of playing a little bit of classical guitar for a couple of years, a background in sailing. I've done all these different things, chess and backgammon and poker and all this stuff where you learn it incrementally, because you have to take the emotion out of it. So I'm trying to do that now by going back and trading this $1,000 real live account. And it's very difficult for me to do that emotionally because I did it the wrong way. So when I present this to somebody, it's $1,000 in a sim account until you reach certain goals, and then you fund your live account with $1,000. And as I've said a gazillion times, I don't care whether you're a multimillionaire. You're going to fund that first live account with $1,000 bank, and you're going to trade that, so that you're certain that you are implementing the rules and not getting wrapped up in the emotions. Because if you get wrapped up in the emotions and you're not trained properly, then you could lose that $1,000 and refund it and lose it, and then start gaining and winning and all that stuff, and then finally think that you've got it and throw $20,000 or $30,000 or $40,000 in there, and you will lose it. It's just that we're just wired up that way, folks. I mean, that's just the way it is. I've spent my life as a martial artist studying psychology and studying philosophy. I understand how we function as human beings, and I've applied that successfully to everything that I've done, real estate and karate and poker, and but I didn't do it in trading. Why? Because there were so many books on trading and so many talking heads doing videos and all this other stuff that I did it their way. And that isn't the way that the successful ones started, most of them. But that's the way they tell you to trade, the way they're trading now. But you can't trade that way now when you're starting out. You just can't. You have to set your mind in sync with your rules. Peter Rose, founder, Longwood Currency Trading. Thanks very much for sticking with me. If you've gone this far on this video, have a great day. Have a great trading day.